Hello traders. In today's video, I'll be showing you how to identify trends on the Forex chart and how to trade them using these two simple strategies. These are beginner-friendly strategies and can be used on any time frame. Let's get into it. Alright, so we are going to be starting with trends. What are trends? Basically, the market moves in three ways. It's either the price is moving upwards, downwards, or sideways. So when we say an uptrend, okay, what we mean is that price starts at a lower level, pushes higher, creates a higher low, then goes ahead to create a higher high. When we say a higher high, we mean that this recent high is above the previous high that the market made. Comes down to create a low which is higher than what this previous lows. Then goes ahead to create another high. When this happens, we say that the market is in an uptrend. All right. Again, when the market is trending downwards, that is to say, price starts from a higher point and comes lower. And after dropping, it pushes up a little bit, creating another high. All right. Which is lower than the previous high. So we call this a higher low. Then comes down to create what? A lower low. And pushes up and down. And we call this a downtrend. That is to say that market is moving downwards. It starts with a high, creates a low, then a lower high, lower low, lower high, and lower low. Okay, then we say the market is in a downtrend. However, when we say the market is moving sideways, it means that price is neither trending up nor down. So it's more or less ranging. So it starts at a point and goes up, and market drops to the same or the previous level at which it started from and goes back up to the level it went to first. Then comes down to the same level. So when you see the market moving this way, then we mean the market is ranging. All right. Now, with this understanding, let us go into the actual charts. Now, here is a typical example of a market that is in a downtrend. All right. So you could see that price started from this point, this high, all right, dropped to this low, came up a little bit. Then what happened? Price dropped to this low, then came up a little bit. Now you could see that this level is basically equal to that level. So I'm going to pick that. So it came to this high and dropped to this low. All right. So now this is a typical downtrend. Let's now look at a scenario where price was in an uptrend. Okay. So we could see from here or from this chart that price started from this low, okay, and went high. Then market or price dropped low. So it created what? A low that is higher than the previous low. So we call this a higher low. Then pushed up to create a high, which is higher than the previous high. And so we call it a higher high. Then price came back, created a low, a higher low, a higher high, created this tiny low, created another high, price dropped, still in the upward trend, and created this high. Okay, so you could see that the market went upward. It kept creating higher lows, higher lows, higher lows. All right, and that is when we see the market is in an uptrend. Now, with this understanding, let us look at the two simple strategies that can gain you some profits in a trending market. The first strategy we'll be looking at is the trend following strategy. The trend following strategy. Now, you need to know that you need a minimum of 2 touch points to identify a trend. and a maximum of 3 touch points. When you have 3 touch points, your trend line is more valid. Now let's take a look at this particular example. Okay, so I come to the chart and then I see markets moving upwards. Okay, so price is now making an uptrend, and then you go and then you pick your trend line tool. All right, this is my trend line tool. So I pick my trend line tool and try to establish a trend from, say, a trend line from this point to here. Okay, let me extend this to here. All right, so then I'm able to identify that this is a 2 touch point, but usually a 2 touch point is not as valid as a 3 touch point. All right, so I would wait for a 3rd touch point. So let's say I watch the markets to see, and price comes back to the trend line and respects it. So this becomes my 3rd touch point. Okay, I am not going to enter this trade. This just confirms that, okay, this trend line is valid and price continues to respect it. So I would patiently wait for price to come back to the trend line, and then I'll look for a setup. Okay, so let's say now from here you can see that price has come close. This is more or less the 4th touch point. So this is the 1st, 2nd, 3rd, which shows that my trend line is valid. And now I have a 4th touch point, and so I'm going to be looking for what? A buy. And let's say I place my buy here, and my stop loss is going to be a little below the previous low. All right, because I'm assuming that the market is in an uptrend, or I can see that the market is in an uptrend, and so I don't expect price to drop below the previous low. All right, so if this is my stop loss level, and let's say I'm targeting a 1:1, this will be a 1:1, or a 1:2 will be somewhere here. Okay, and then let's see if price is going to respect it. So it respects the trend line and then pushes all the way up to take profit. That is the first example on how to trade using the trend following strategy. Let's look at the second example. So we can clearly see that on the left side, price has made higher lows, higher lows, higher lows, and created a high here. And now let's observe what happens to the market. So we could see price dropping, and you try to, with your eye, catch touch points. All right, so with your eye or your trend line tool, I can pick this high and map out to that. So once I've connected these 2 points, I have created a trend line. Now the next is for me to know whether this trend line is going to be valid or not. So I will wait on my 3rd touch. So the 3rd touch I could enter if I'm confident that it's actually a downtrend, or I could use the 3rd touch as a confirmation. All right, so we can see from here that price dropped really low from the 2nd touch. Now we wait to see if price will come back to the trend line. Okay, all right, so you could see that price came back to the trend line, and this would be where our entry would have been if we were actually trading the market. So let's say this is a short position, so let's say I enter short even if on this candle, all right, because of this 3rd touch, and then my stop loss is going to be above the previous high. That is 22, that is 220 pips on gold. And then let's just say I'm targeting a 1:1, so a 22, or yeah, 22, 23, yeah, that is a 1:1. All right, and we see the market move downwards, and then boom, we hit our take profit. Now let's say, for example, you even used this 3rd touch as another confirmation, as a confirmation. We are going to wait to see if we are going to have the 4th touch for us to take another trade. So we watch price, go lower. Price keeps coming lower. All right. So we have our fourth touch here, which is very close to this trend line. You see? Okay, so this is our fourth touch. And based on this fourth touch, we can have another entry for this a short. Now we are confirming that indeed. All right, so let's say I'm picking a 1:1. This is 14, 14. All right, so the 1:1. So you can see that price drops and hits take profit. It just takes profit real fast. Okay, so we have here first trend line, second trend line. Sorry, first point, second point helps us to identify the trend by drawing the trend line. Now, the third touch on the trend line is either a confirmation or an entry, depending on how confident you are in that trade or on that setup. So you could enter on the third touch point, or you could wait and use the third touch point as a confirmation that market is actually in a downtrend. All right. So then we wait for price to come down, and then we have a fourth touch point, and you can pick your entry on that fourth touch point, having confirmed that the three touches on the trend line are solid and valid. Now, let's look at the second strategy. This is the break and retest strategy. Here you observe your trend line and you realize that market has tested the trend line a couple of times, about 3, 4, 5 times. And then you wait for the trend line to actually break to the opposite side. So if it's an uptrend, you wait for the trend line to break downwards. And if it's a downtrend, you wait for the trend line to break upwards. And when that happens, you do not execute your trade, you wait for a retest before you take action. So we can look at this example here. You can see from this example here that price has tested this trend line a couple of 1, 2, we could even consider this 3, 4, close to 5 times. All right, or we could say 1, 2, 3 times. All right, and so we are waiting to see if the next touch on the trend line is going to be respected or not. All right, so when we watch price play out, let me zoom in a little bit so we can actually see the price action. When we watch price play out and come close to the trend line, you see it actually breaks it. Okay, and this shows that there is either going to be a change in direction. Okay, so but then you don't enter the market yet. You wait for price to come back and test the trend line before you enter your trade. So you wait for price to, after it has broken, you can see after breaking the trend line, price pushed back up. Okay, and then retested the trend line, and so you can now execute your trade by going short. So we're in an uptrend, but now we are going in the opposite direction, so we are going short. All right, and usually you can pick a sizable stop loss or the previous high. Okay, so let's say I place my stop loss here and I target this as my take profit. Then we watch price play out. Okay, and that is how you take the break and retest strategy. You can see price dilly-dallying, going back to entry, but then in the long run it is going to what? Drop. All right, how many pips do we have there? All right, that is a good trade. Let's take another example. So here is another good example of a trend line break and retest. So you can clearly see that this trend line has been tested a couple of times. So let's say price came to this level, dropped, came back to this level again, dropped, then came back to this, the same, the trend line, this slope, right? and it keeps dropping. However, upon watching the market play out, you can see that it came back to the trend line. And this time around, what happened? It broke to the upside. So here is the breakout. But you do not enter the trade first. You wait for the trend line to be retested again. Wait for the trend line to be retested again before you take your break and retest entry. Okay, so you wait for price to move back down to actually retest. All right, so you see price came here and retested the trend line, and this is where you take your entry. Okay, so we would have taken our entry from the, we'll be buying this time around, right? We would have taken our entry from this candle, and then would have placed our stop loss on the previous low. Okay, so somewhere here, and then targeted either a 1:1 or a 1:2. Right, this would be like a 1:2, and then watch price play out. Okay, so you could see that. Okay, so you see from here that price came and retested the trend line, went upward, came back to retest the trend line again, and then what happened? It pushed upwards. But because our stop loss was rightly positioned, we didn't get hit, and boom, take profit has been hit. So this is how you benefit from a trending market. It's either you are trading the trend following strategy, or you are trading the trend line break and retest strategy. Alright guys, remember to keep it simple. Follow the trend and wait for confirmation before you enter any trade. If you found this video helpful, don't forget to like, subscribe and hit the bell icon for more Forex tips like this. Until next time, happy trading.